Should I buy life insurance on my kids? Welcome back to Question An Actuary, where you ask and I reply. I'm Pramod Sharma. Question: should I buy life insurance on my kids? Answer: since kids are good at getting sick, you'll often want coverage for drugs, dental, and hospitals. What about life insurance? That is controversial, and that's what we'll explore now. Can you imagine losing your child? Money cannot restore the loss. Fortunately, few children die. Leading insurers rarely cover kids in Canada. The ones that do limit coverage so the child isn't worth more dead than alive. That's called a moral hazard, and yes, children have been killed for money. Insurers who cover kids charge lots. They can because the sale tends to be emotional and you rarely shop around. Let's see how much insurance costs on a child. You're the concerned parent. Your child is 10 years old. Let's just use a male. And let's look at 10-year term insurance. There's only one insurance company that offers a product in this category. Let's go back and try something else. Advisors who sell insurance on children tend to prefer things like whole life insurance, which is more expensive. Let's look at this. So this is whole life insurance, guaranteed life pay. Continue. You see that there are more companies that are available now. The cheapest product is $34.56. Let's run another quote. This time we'll look at another product. Let's look at universal life insurance, and we'll pay the minimum premium for life. Let's do a quote on that. This is cheaper. The premium here is under $30 a month. Let's go back and look at something else. Now suppose our 10-year-old is 20 instead. So instead of being born in 2005, born in 1995, and is getting Universal Life T100 minimum premium. Let's look at the cost there. Under $37 a month is the cost. And this means not having paid the premiums for the 10-year-old for a 10-year period. As another comparison, let's look at whole life and see what that would cost. The premium is a little over $42 a month. Suppose we're looking at term insurance and we're looking at level term to age 65. Isn't this interesting? For $14.40 a month, a 20-year-old, here's our 20-year-old, can have insurance for $100,000 for 45 years. Let's look at the standard 10-year term insurance just to show you how many companies are available for the adult market. The premiums are as low as $9.36, and that would be for a 10-year period. And look at how many companies offer products on adults. The few advisors in the children's market tend to be newer and less experienced. What if your child is healthy now but becomes uninsurable later? This is a standard sales gambit. Children become adults and adults work. An adult who's uninsurable for personal life insurance can often get group life insurance for 1 or 2 times salary at work without underwriting. Since lives are pooled, the healthy subsidize the unhealthy. See Q&A number 3 for more. The link is below. If you change employers voluntarily or involuntarily, you can often keep that insurance if you act fast. This is called a group conversion. Plus, you can often get new insurance from your new employer. Permanent insurance has a savings component. Maybe there's a way to save for university. In Canada, consider an RESP instead. You get government incentives without paying hefty insurance charges, which fund juicy compensation to your advisor. In most cases, parents need money for current expenses. Is allocating some to insurance on your kids an optimal use? You could put that money towards your mortgage and save oodles in interest payments. Do you have enough insurance on yourself, including disability and critical illness insurance? Since advisors are commissioned salespeople, they are not obligated to show honest comparisons against your other options. Why would they do extra work to lose a sale? Even if they have the will, do they have the skill? Life insurance is intended to replace a financial loss. Is your child earning big money as a YouTube star? Your own income may suffer while you're grieving, but that's temporary. Since children are expensive, you may have overall savings if one dies, We don't look at children as financial assets or liabilities, though. But isn't that exactly what an advisor is doing when pushing life insurance on kids? Who really benefits? Question: would you buy life insurance on your kids? Share your thoughts and ask your questions below. For my private personal attention in Toronto, simply reserve time to visit the Taxevity Insurance Clinic.